Well, good morning, everyone. Thomas Montgomery. We get together with our distribution partners most weekday mornings, this time, 8 o'clock Central. Today is Friday, April 8th, 2022. And we're going to take a deeper dive into accounts receivable financing. So let's take a step back, kind of look at the bigger context, and then we're going to drill in to some very specific information that a number of you have asked for. All right, so I'm navigating here. We're going to bounce between two sites, but we're on the business paralegal site, the Collateral Support Program. I think you all know this describes how you and I can help small businesses address a collateral shortfall, which is often the reason for not getting approved for funding. We've covered that, but the bottom video here drills into AR financing. So what we know is that there are 4 different categories or strategies to liquidate the AR that is acquired through the debt portfolio purchase, the Collateral Support Program. The 4th of those, and they're listed out over on the Debt Buyers Club. So we're talking about this 4th bullet here. So this is an independent third-party website, and Tom Thrunston also is a former SBA, SBDC advisor like myself. And ironically, he graduated from the University of Minnesota, as I did. But regardless, Tom wrote this article for Fit Small Business, and it's unrelated to us. But we're going to go through Tom's review of his opinion. And frankly, we use a couple other ones in addition to these 5. But his review are the 5 best accounts receivable financing companies. So what you can see is we're completing the circle of knowledge here. So we have the Collateral Support Program, which is the method in which clients can obtain large portfolios of receivables that they can liquidate, which builds their balance sheet, makes them look stronger, of course, but they can liquidate a number of different ways. And now we're going to drill into some resources on the market to do this exact thing from an independent article developed by a different Tom. All right, so let's just kind of read through it, and then we'll drill into the 5 different, in my opinion, there's really 4 different, this is just a catch-all, but there's 4 different companies that this Tom, the other Tom, referenced as the best way for small businesses to leverage AR financing. All right, so accounts receivable financing provides funding to help a small business address its cash flow or provide short-term working capital. AR financing is based on the value of outstanding receivables that lenders choose to collateralize, providing businesses with the funds that they need. So again, he selected 5. We're going to skip Lendio because really it's a comparison site. We're going to focus on these first 4, and we're going to drill into what they're looking for and how they work. And this is unedited. I didn't copy this off and put it on a Word document. We're working right off of Fit Small Business. All right, so the first of the 4 that Tom really likes is First Commercial Credit. He states that it's the best for a higher percentage of invoices financed. So we're going to drill into some bullets of how each of these operate. So complete transparency, a great level of information. So what Tom likes, again, this is not our opinion. This is an independent third-party review by the other Tom. He likes their competitive rates, high advance percentage available, because keep in mind, when you have accounts receivables that you're wishing to finance, often they won't finance dollar for dollar. Often they won't finance 100%, but this one gets pretty close, which we'll see in a minute, and they will work with newer businesses. So cost and terms, they will fund from $10,000 to $10 million, right? That's not bad. They will advance not 100%, which we said is almost too good to be true, but up to 97%. That is very strong. Advances are repaid as customers pay their invoices. Here's the fee. So these third-party companies, they don't work for free, just like you don't probably want to work for free. Joseph, one of our top referral partners up in Arkansas, he sells probably more homes than anyone else in the state. and businesses and commercial properties, I should say. He doesn't want to work for free, right? So they do charge, and this is how they charge off of the discount rate. But we're going to look at the discount rates for each of these different alternatives so you can make an educated decision. There are no origination or maintenance fees, no prepayment fees, no additional fees. Funding speed takes about 15 minutes to apply. That's not bad, right? And funding in 3 to 5 days. Now we're going to go deeper. That's not all. We're going to go through some features and requirements. So this option, first commercial credit, will require a personal guarantee. We'll see some of the other options don't. That's what we're doing. We're comparing these different sources for AR financing. However, the caveat is there are others other than the 4 we're going through today. These are the 4 that this independent review covered. They will accept minimum credit scores. They don't really have a stated minimum. They do want the business to be in business at least 3 months. That's not a very high hurdle to hit, right? Most businesses have been open 3 months. There's no stated annual revenue, but they need the revenue to support the financing request. Well, remember how we structure the AR is when we sell the portfolio, we help the client, the debt buyer, if you will, post the assets to their balance sheet and then start posting the late fees, which accrue $50 a day per account, about $15,000 a month, to their income statement, their profit and loss, using the accrual method of accounting. So there's workarounds. It is recourse. In other words, if the client doesn't pay, then it has to be paid back. There is required customer interaction, and there is assignment of invoices. All right, so that's the first of the 4 we're going to review. So hopefully what we're accomplishing is we're pulling back the curtain and looking even deeper into how some of these AR financing programs work with great detail. Okay, so that's the first of the 4 we're going to review today. Let's go through the second of the 4, and it's a company called Fund Through. And according to the other Tom, he says it's best for smaller businesses. Great for smaller financing needs, high advance percentages, can link to QuickBooks. And you hear us preach about QuickBooks all the time because small businesses need to be ran properly. We need to be able to track our revenue and expenses, assets, and liabilities. And while we have no financial interest in QuickBooks, QuickBooks is one of the most widely used small business accounting software. All right, so let's get down to cost and terms, where the rubber hits the road. They'll fund as little as $500 up to $15,000 in their Express program. I want to stop the show for a moment here, because one of the things that I've failed to share with you that I needed to, let's take Jasper. Jasper's on the training today. He is a debt buyer of ours. He has bought a portfolio. So Jasper bought a portfolio, real person, real transaction. He just bought it yesterday, of $100,000. What Jasper can do is he doesn't have to move everything at once. He could break it up. And also what Jasper could do is resell part of his portfolio. So let's say that Jasper, well, we'll use a different example. We have Tanya. Tanya's on our training this morning, I believe. So Tanya is another debt buyer. She's one of our white label partners. We're working on a number of her clients. We've recognized many of them have collateral shortfall. What she could do is sell just one account to one of her clients. She doesn't have to sell the whole $100,000 portfolio. She could break it down and help that client get their first round of funding from AR financing. So the point is, when we sell a portfolio, it's a $100,000 portfolio. But if you're a debt buyer, you can break that up and sell it in smaller increments, and that works really well for Fund Through. Now, interesting, they will advance up to 100%. Now, of course, it's up to, we were only at 97% before. But so what we're saying is, okay, if you sent over $100,000 of receivables, they would literally advance up to 100% of that. Advances are repaid as customers pay their invoices. Here's their discount rate, expected APR. no origination or maintenance fees, no prepayment penalties. They do charge for their wire transfer. Funding speed, 10 minutes to apply, which is quicker, right? We were at 15 minutes before. We can save 5 minutes. And decision and funding within 24 hours. AR financing is real. I think so many people think it's too good to be true. This can't be right. So when we put this training over here, whoops, wrong page, over on Collateral Support Program page, people are thinking, well, I mean, that's a good pitch, but that sounds too good to be true. Well, here we're going through and seeing these are companies, well-established, successful companies that are providing the vehicle to give AR revenue financing. It's real. All right, so let's move on to the third. Oh, no, we didn't get down to features and requirements of number 2, fund through. So typically not required personal guarantee. So you can see when we're looking at these different solutions, some require personal guarantees, some don't. That's why I'm bringing your attention to this page. So you can see that if you become a debt buyer, either for your own purpose or to resell, there's a number of different resources that can help the end consumer liquidate. No minimum credit score. Again, 3 months in business, can't help that. Really not much on annual revenue. And remember, we can create revenue on the income statement / profit and loss statement based upon billing out the late fees. Recourse agreement, no customer interaction. All right, so that's the second of the 4 resources for AR financing that this independent gentleman, also from University of Minnesota, also a former SBA, SBDC advisor, has written about. So let's go to number 3 now. Crestmark, best option for startups, the other Tom says. Customizable rate solutions for each borrower may be advantageous for some businesses, will provide financing to startups. Funding amount up to 10 million. Well, that's pretty good, right? It's rare that we see a client that needs more than $10 million. So to me, that's going to capture the market. Their advance rate's a little bit lower. So if you send 100,000 over, they're only going to finance up to 90,000 of that. Still 9 cents on the dollar, or 90 cents on the dollar, I should say, 90%. Again, it's repaid as customers pay their invoices. The discount rate varies based upon the portfolio. There's no origination or maintenance fees, no prepayment penalties. They say the additional fees will be disclosed based upon the portfolio. So you essentially have to work with them and get a portfolio to see what their complete fee structure would be. Funding speed, 15 minutes to apply, which is about the same. All of these are taking 10 to 15 minutes, not bad. Approval in 7 to 10 days. So they have a little bit more underwriting than the others. Features and requirements. What's the personal guarantee? May be required. Minimum credit score, no minimum credit score. So you're starting to see, I hope, confirmation. When we talk about the Collateral Support Program and how it helps clients build their balance sheet, and then we provide them ways that they can leverage that AR to liquidate and improve their cash flow, this is real. This is real. All right, moving on with no minimum credit score. No minimum time in business. So the others required at least 3 months, which frankly isn't very long. Here, we can do it right out of the box. No minimum annual revenue. They have both recourse and non-recourse. Customer interaction depends upon arrangement. We do have to assign the invoices. All right. So that is the third of 4 AR financing options that were reviewed independently by the other Tom. Fourth and final. B2B investor, sorry. Best for larger invoices, very competitive discount rate, no credit requirement, simple online platform. Here, they won't do less than 500,000. So this works well for our debt buyers that are buying 5 or more portfolios. So you can see that there's different models of AR financing, different companies that provide those services. This one would only work when we have a client that buys 5 or more portfolios. But I can tell you there's a good number, not the majority, but a good number of our debt buyers are buying 5 or more. I would say of the larger portfolios, I think 6 is the most frequent number. Take Phil and Bruce, they're a team. Almost every one of their clients have bought 6 portfolios, for example. Anyway, let's get back to the topic. The advance rate, they'll only advance up to 80%. So here's a rub. So someone gets 500,000 of portfolios, they submit it in, they're only going to get 400,000 of advanced dollars. So be aware of that. Repayment terms are the same as others as customers pay. Discount rate is listed. Expected APR is there. They do have some origination fees, and we're not sharing in that. We're not getting kickbacks from any of these people. No prepayment fees, no additional fees. Funding speed, 20 minutes to apply, so a few more minutes than the others. Funding within 2 weeks. But that's not real surprising because this is a much larger amount. Features and requirements. There is a personal guarantee here. No minimum credit score. So again, going back, not to toot our horn, but when we started rolling out this concept of the collateral support program, and this works really well for small businesses that do not have established credit, either the business itself and or the business owner, I think people thought, well, that's too good to be true. No, you can see that. I mean, we're seeing it right here in writing. We're validating the message that we've been sharing. Now, they are requiring at least 1 year time in business. We can work around that because if we need to use a business entity that has been in business a year or more, we can provide that shell if needed. A little bit higher annual revenue, but again, what we can do is get the portfolios on the client's balance sheet and income statement. And so this is 500,000, but that's annual. So you divide it by 12. So that's 60,000 a month. So by having 5 portfolios, that math will add up. So that's easier to accomplish than maybe what it looks at first glance. Recourse, again, customer interaction depends on arrangement, have to assign the invoices. All right, so I don't want to belabor this, but what we wanted to accomplish today is that the Collateral Support Program is a very important resource for many small businesses because many of them have a collateral shortfall. In other words, their balance sheets are not strong enough to justify the amount of funding that they're looking for. So what you and I do as technical advisors is help people, well, fill the credibility gaps. But in this case, we fill the credit shortfall by adding accounts receivable through the Collateral Support Program. If you wish, you can be a debt buyer and a debt seller, and that's what this page describes. There's no cost to be a debt buyer. But today's training is going that next step to help have a deeper understanding of one of the 4 strategies of liquidating, which is accounts receivable financing. And what we've used is an article that is was written, I guess I should say, by a very, very respected individual who has a strong background, and he independently reviewed, in his words, 5 options. Lindio, I don't think is really an option, but the first 4. And you can see that there are different solutions for different client circumstances. We do see that some advance up to 100%. We do see that many have no minimum credit requirements. We see some have no minimum time in business and no annual revenue. So it's the real deal. What do you do now? What do you do after today's session? Well, I would encourage you to go to Business Paralegal, go to the Collateral Support Program, review this information. There's additional training there if you want. But the bottom line is just fill out this box here and let us know what role you want to be in. If you are also a small business owner and want to leverage the Collateral Support Program for your own business, then let us know that here in this box. Or if you don't really want to do that, you're just simply wanting to be one of our debt buyers, part of our debt buyers club, as we call it, there's no cost, then you can disclose that here in the box. And then from there, we can work with you. So it's a great way to help small businesses. It's a material way to add to your income, because if you're a debt buyer, you buy it at wholesale and you have the option to resell it at retail. And that spread, which you determine, often is $5,000 to $10,000 per portfolio. And all you're doing is just really brokering the deal, kind of shuffling paper, adding value, granted. So are there any questions that anyone has about the Collateral Support Program or the different options for AR financing before we leave today's training? We try to keep Fridays a little bit shorter, Friday's training, so we can all get back to work and head into the weekend center. Any questions on this? All right, Des is asking about number of portfolios. And so you're right, Des, you're welcome to buy as many portfolios as you want. We package them in 100,000 a piece, but you could buy them and then flip them or sell them to clients. You could buy and hold and collect off of those, because as we talked about over in the Debt Buyers Club, there's a number of different ways to liquidate, but there is no minimum. And as Doug referenced, so we finance that. You pay just 1 point down, the rest of it we finance. So it's very affordable, and it's designed where you start cash flowing positive within the first 30 days, 30, 60 days. And Reese is asking, yeah, so we are here to assist you with this process. Our organization has been buying and selling debt, defaulted debt, and it is a very profitable industry that you can plug into. And again, we're not asking you to pay something to be a debt buyer. You can buy and turn around and sell it for an increased amount and make profit, or you could acquire it for your own balance sheet income statement and benefit from it personally. All right, well, thanks everyone. We'll see you back Monday morning. Have a great weekend. Let us know if you have any questions, and just go ahead and go over to Collateral Support Program page. Let us know how you want to be involved, and we'll do it. Thanks so much. Have a great day.